And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. The spike in crude prices off a coordinated attack on Saudi Arabia's oil supply has energy stocks rallying big, along with energy ETFs. But buyer beware, this is a hollowed out, heavily shorted sector of the market. You might be surprised at what exactly you're buying. That's a favorite theme here at ETF Edge, joined today by Todd Rosenbluth. He's the head of ETF and mutual fund research at CFRA. Tom Lydon, who runs ETFtrends.com. And Tom, the important thing here, I say hollowed out. We like to talk about ETF volume. Today we're getting very big volume in these energy ETFs. The XLE, which is the biggest energy ETF out there, the S&P, has got huge volume. Yet when you look under the hood at what this actually is today, 45% are two stocks, Chevron and Exxon. Two stocks in a sector in the S&P. I've never seen that, and it speaks to how hollowed out this sector is. Everything else is down so much that the two big guys left basically are the market at this point. Your thoughts on what somebody who might be interested in rotating into these energy ETFs what's the right way to look at this?
Well, the ETFs that you brought up, it covered three areas, Bob. USO, which is spot crude itself.
Oil.
So if you just do not want to mess with the companies, you can buy oil. On the other hand, you can buy those big energy companies, or you can buy the services companies with Halliburton and Schlumberger, where that's actually up greater today. It might be that those companies are going to be brought in to help prepare
and that would be
help out.
OIH is
that's
the symbol
correct,
there.
right?
Yeah. And Todd, there's also energy exploration and production companies. Seeing some of these Permian and Bakken companies, small Bakken companies, do very, very well today. That symbol is XOP for that ETF. I guess the problem I have, I know you're not an oil stock analyst, but is there any reason for a person interested in moving money around through the ETF ecosystem to consider one of these sectors at this point, given how hollowed out energy is in general?
Well, I work with them at CFRA, and so our equity analytical team put out research today. Stu Glickman heads that up, and we are more favorable on the exploration and production companies. And some of these smaller cap companies that you mentioned earlier, higher debt leverage, weaker cash flows, this has really been a boost for them, a jolt that was unexpected from a supply perspective, and this could take a little bit of a while. You also have exposure to value ETFs, have exposure to energy, so IVE and RPV are some of the value slices of the S&P 500, where the energy exposure is higher than what you'd find in the S&P.
You know, Tom, I don't think people understand how different the world is now, even than 10 years ago, but certainly than in the 1970s, when the energy was more than 20% of the S&P. Today, it's 5%. We're only down 0.5%. If this would have happened 10 years ago, even 10 years ago, we would have been down 500, 600 points, I think, on this. And yet the energy independence that the U.S. has been slowly gaining, we are the largest producer of oil in the world, I think it's really mitigated the effects of this. I'm not trying to downplay it, but certainly we would have seen a more dramatic response 10 years ago.
But big question is, Bob, going forward, is it one and done, or are we going to see more? And
right.
A lot of investors out there are thinking that might be the case, so they're actually leveraging up through some 1, 2, 3 times ETFs that are available. And again, it's a short-term trade.
I want to move on, but is there any reason to believe, talking about what he says, is there any reason to believe that oil company profits in general are going to be any higher in the next couple of years because of this event? That's going to be the key question for a long-term investor. Is there any reason to be optimistic about that?
Right. Well, supply and demand is obviously the key thing that happens within the energy space. So now we've seen supply come off a bit. Demand is continuing to do well. If we see the global economy strong, we could see that continue.